All right, so a very good evening to all our mentorship traders coming to the end of the month of July. This is 30th of July 2021, 9 p.m. Indian Standard Time, Friday evening. Like always, our mentorship invest meet. Let's talk about the index. Let's talk about few sectors, and then we'll talk about trading ideas. Well, I have the 125-minute Nifty futures chart in front of you, and this is the particular chart that I've been sharing over the week in my daily market write-ups. We have one hell of a confused index in our hands, which is kind of okay because I would like to start from a slightly larger perspective and then come down to the smaller time frame. This is the, okay, so what I'll quickly do is these will be visible in your higher time frame. So I need to uncheck them so that they do not bother you when we go to the higher time frames, right? Let me check this also. And so if we go to the weekly time frame, we can get rid of this. What we have is essentially a big consolidation, 1, 2, 3, 4, 5, 6, 7, 8 successive weeks when the markets have, the index at least, have decided to buy some time. This is trading in terms of time. This is essentially something like a catch up, you know, catching up your breath before you start to run further up. So is this a sign of distribution or consolidation? Well, we'll see how it plays out, but the fact that it has not corrected enough is a sign of strong resilience. If you take a look at the daily chart, of course, it will be very clear the way the index has oscillated all throughout since mid-June. So it's been a month and a half. Coming back to that 125-minute chart, which I started off tonight's discussion with. So I've marked those two breakdown failures. You can clearly see how many times the index has oscillated. Down legs, up legs, down legs on a smaller size, then a multiple-legged down leg, then another multiple-legged down leg, and a three-legged, now a five-legged, then quite a sharp fall and an equally sharp fall. So it's all over the place. And the bounce backs have been equally sharp, if not more, which essentially takes us to nowhere. If you take a look at the gain or loss of the index over the last month or two, we've not gone much either direction. I was looking at the short-term resistance of 15,770, 15,780 up here. Then we've got a breakout, and today it did really well, but then towards the end it slipped, gave away everything. So it's all over the place. It's frustrating because the index fails to see follow-through movement in either direction. Short-term trends are reversing almost twice every week. So essentially, in terms of the index, it's not the best of times. These are not the times where a trader would be able to generate returns out of the index, doing directional trades. So let's boil this down into levels. On the top, on the upside, the index had gone all the way close to that, very close to that 16K mark. It went close to that 15,970. So I've marked 15,900, 930, 950. We can just, you know, extend this a little bit, but it needs to sustain above this zone. Short-term resistances 900, 950 is what you should work with for the week ahead. On the downside, of course, 450, 550 is the kind of level. This fat one, this thicker blue range, this is the one that we need to work with. It's very difficult to say which way the index is going to go, because in terms of these sectors, the kind of participation and weakness, both are there. So I would suggest, this is my suggestion, that we should focus more on either very short-term trades or very long-term trades. The in-between kind of a trades are not going to get us anywhere. By very short-term trades, I mean do intraday trades, hit and run, get out. You don't want to get bothered about next day's opening. Very long-term trades is you're not bothered about this daily oscillation or weekly oscillation. You don't care because you're holding this position for multiple years. In either case, you will be much more sorted than those who are probably trying to trade for a week or two, because a lot is changing in a week or two. So probably not the best of times to make money or chase for returns, but I would suggest let's focus on risk management and try and preserve whatever you have managed to make this year so far. The Bank Nifty has been relatively weaker. This is the 125-minute chart of Bank Nifty, and you can clearly see that it is going through a pretty decent downtrend, lower highs, lower lows. The daily chart of the Bank Nifty will show you that the index has now come back again once more to an important support zone down here, which is the 33,900, 34,200, 300 kind of a zone, this one. This index plays an important role. We all know it has got a high weightage in the overall markets. This was the breakout failure. We had spoken about this. Nifty has managed to bounce back, but the Bank Nifty has not. Barring ICICI Bank, I think most of these stocks are not showing, and SBI maybe, the rest of the stocks are not showing that good enough strength. It might find support here and drop us a bounce back, give us a bounce back, but not the sector to look at. This week it was the sector, it was the metals, which did phenomenally well this week, giving us a nice clean breakout. And we got very good participation coming in from IT also. Both the sectors continue to stay on the bullish side, and one should look to buy on a dip. Pharma was volatile. The way Dr. Reddy sold off and the way Sun Pharma bounced back today has been particularly volatile. This sector particularly, we know that it has given us pretty good returns over the last few months, maybe a year and a half, but it seems like something's changing here. And I'm talking purely based on price. Because if you look at the constituents of the CNX Pharma Index, apart from Sun Pharma and maybe an Apollo Hospital and others, most of them are fairly weak. And when I say weak, I say that the short-term trends and the intermediate trends have moved down. So may not give us the kind of outperformance that we have noticed over the last few months. So would like to be a little careful. FMCG completely flat this week. This is the daily chart. This is the weekly chart. It has created an engulfing kind of a behavior. For the Nifty FMCG, this was the breakout, and this is going to act as a support if it comes further down. ITC was the biggest contributor of this weekly fall. We'll see how it plays off. When it comes to finance, private sector banks, see, there's no doubt finance, private sector banks, public sector banks, these are the stocks that when they move, the market actually picks up very good momentum. Finance is not weak. In fact, finance is still very much strong, and we can get that breakout about 17,000. So will be an interesting sector to look to go long sometime in the near future if we get some good supports kicking in. Energy and auto. Now, energy was fairly interesting last week and last to last week when we found some doji kind of a patterns and the selling has slowed down. But then again, this week, it continued further. We still have a nice uptrend, a higher highs, higher lows, kind of a beautiful sequence. This is RSI 9, which has kind of come down to its level of mid-April. RSI 9 down here. So energy might take a little bit of more time. Will be interesting to see the OMCs and Reliance Energy, Reliance Industries, of course. And there's auto. Auto is struggling at this resistance band, and this is a very, very old level. This is the kind of levels that's coming from 2016, 17, 18. recently 21 and now mid 21. So this will be a big breakout once it manages to take out that 11,000 mark on the Nifty. This looks like an Adam and Eve kind of a double topish pattern. We should be a little careful about this also. This looks like an Adam and Eve double top. This is Adam and this is Eve. The Eve is much more rounder and Adam is more like a V. So the trend is still up, and auto energy might substitute the performance that we have got from metals and IT. I repeat, auto and energy particularly can substitute IT and metals, especially metals, if these two indices slow down. So we will continue to keep a close look at the auto stocks. We will continue to keep a close look at the energy stocks, and we'll try and find which are the constituents which can give us a bounce back. If the Nifty continues to hold on to its ground, if we do not get any significant correction from the index itself, then this relay between the sectors will definitely continue. The Nifty on the weekly time frame, we do have some bit of price momentum divergences, which can be a sign of concern. It is a sign of concern. And a break of 15,500, a close below 15,500 can definitely give us opportunities to look and buy more at lower levels. In that case, a quick 500 point drop towards 15K is very, very likely. So be careful, as I was continuously writing over the last fortnight. Not the best of times to make returns, maybe preserve. Be careful, cautious. Either do ultra short-term trades or do ultra long-term trades. In between, the chances of getting stuck is very, very high. All right, so now let's move on and let's talk about the stocks and trading ideas for the week.